Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba, and thanks for joining me. Tonight, I'm joined by Dexter Mahachi, research analyst at Momentum SP Reid Securities, to take a closer look at the cement sector in West Africa. Dexter, I like this sector. I like the first name that I always like talking about, Dangote anything, right? Yeah. Seemingly always impressive businesses. How has Dangote Cement done of late?
I think they've been doing quite well over the past year. Mm-hmm. A lot of extra capacity has come in online from some of their businesses outside of Nigeria.
Right.
In terms of, if we were to look at the revenue contribution as of 9 months last year, only 80% of the revenue was coming from Nigeria, as compared to 94% of the revenue in 2014.
Right.
So if you look at it, there was almost like a big contribution push from some of their businesses which started coming online from South Africa to Zambia to also some of the ones in East Africa, which added in an extra almost 19%. Almost 15 to 19% in terms of revenue contribution.
Now, in terms of this big push that we've seen from Dangote in particular to expand, that's clearly starting to pay dividends over the last little while.
Yes, I think it's been helping them a lot because it has diversified the earnings. As I stated previously. The earnings contribution from Nigeria has fallen from 94% to 80% in terms of revenue. So if we look at it now in terms of Naira terms, if we look at it in terms of the depreciation of the Naira versus the US dollar, and the fact that they now have a more diversified revenue base with earnings coming from South Africa, others coming from Zambia and other countries, that should help them shore up the business. And as you would know, the US dollar has been strong against most of the African country currencies. So because having a diversified earnings base and not relying solely on one country will help them in terms of shoring up their revenue growth year on year.
Okay, and let's spend a moment on the key focus market, which is Nigeria, right?
Of course.
Still, what impact has the slowing economy had in terms of volume growth on cement in particular?
Actually, volume growth has been rather resilient in terms of cement consumption. The reason behind this is the fact that although the government sector has slowed down, last year we saw the elections slowing down the consumption of cement by the government sector. Of course, ministries weren't really planning new projects, right, and they weren't really going out there to buy more cement for whatever new project.
Because everybody waits for the election results.
Everybody was waiting for the election results, and they came in with a big surprise. And subsequent to that, there was also a big slowdown in that contribution from in consumption contribution from the government side, because the new president took his time in order to select the new ministers, and of course it meant that there was a little bit of hesitation on the part of some of the ministries in implementing the new projects, because they were not sure who the new political head would be. But on the other hand, if you look at consumption coming through from private companies and private individuals, that has remained resilient. The reason behind this is the fact that Nigeria still has a very big housing shortage. Right. And that has been a key driver for cement consumption in Nigeria. Right. You'll find a lot of the cement is being taken up by guys who have their small little businesses on the side, making bricks and making blocks, cement blocks, which are then used to construct houses. So because of that, we found that cement consumption throughout Nigeria has been more or less resilient. In terms of revenues for Nigeria alone, Nigerian revenues only fell by almost like 5% or below that, despite the slowdown, economic slowdown, despite the fact that government wasn't really consuming cement, simply because the private sector consumption remained high.
And in terms of margins within Nigeria in particular, what are margins looking like?
Margins in Nigeria have remained resilient. You find that most of the cement manufacturers, WAPCO included, and even Dangote as well, are still earning gross margins in excess of 30%.
Which it always blows my mind, right? Those are phenomenal margins for any cement player.
Of course. I think one of the things which has come in as a boon for most cement players is the fact that fuel costs have come down.
Right.
Whilst a lot of people might be talking about the fact that the oil, the fall in the oil price has actually affected a lot of people, a lot of businesses. Has actually affected the revenues from cement from oil exporters like Nigeria.
Yes.
It has been a bit of a boon for businesses like cement manufacturers because their businesses rely a lot on energy. Energy is about 40% of the costs.
Right.
And they use a lot of gas, they use a lot of oil, LPFO, low LPFO in order to fire up their cement plants. So the lower oil costs have meant that they've had lower production costs.
Right.
And of course the gas price is also linked to the oil price. So that has also fallen down. So that has helped to show up the margins throughout the year.
That's such an important point that you make. I mean, again, we harp about the lower commodity prices in general, but
of course,
even in a market like Nigeria, there's some industries and some sectors, actually major sectors, that benefit from a lower oil price.
Yeah, and that is true. So in terms of our outlook for the cement sector and for Dangote in particular, we're still maintaining a buy on it.
Right.
We have a positive feel. We like what they're doing on the continent in terms of all the new capacity coming online. We like what they're doing in Nigeria and the attempts to actually try and export cement from outside Nigeria, from inside Nigeria to the rest of the West African region.
Right.
So if we look at it operationally, they're doing fantastic.
Just final comment on Dangote in particular. Sure. What are margins looking like outside of Nigeria?
Outside of Nigeria, margins are a bit lower. We don't have much color to that extent. They just give us mostly the gross operating margins and so forth. But from what we can tell, margins outside of Nigeria in terms of the gross margin are about 10%, 9% lower than those achieved in Nigeria. Of course, you have to bear in mind that in Nigeria they still have those they still have those incentives in place for people who are putting up new plants, which mean that they pay lower taxes, and of course they have a few other various incentives in place to assist them. This is also the case in places like Cameroon and Tanzania, and some of the places where they're trying to put up some of their factories. They actually tend to get tax concessions and as key investors, because whenever they put up a plant, they make sure that they put those things on the table.
Okay, let's move to the other big player in the market. How are they doing in this current environment?
Lafarge is doing reasonably well. If we look at the 9-month results, earnings were down roughly by about 6.95% year on year. In terms of some of the key operations, you'll find that in South Africa they're still suffering a bit. Volumes were down and so forth, and that has had a major impact in terms of the gross revenues and the earnings for the whole business. But in Nigeria, they're doing really reasonably well. Ashaka was down slightly because of the fact that there was a lot of political turmoil in the north of Nigeria due to Boko Haram. There were a few attacks on their plants, and as a result, they had to curtail production there at one point or the other. They had to stop production in order to try and take care of the security concerns. However, if you look at on the side of the demand remains resilient. Operations such as the WAPCO operations are still doing quite well. Unicom is also doing well. So there's a bit of a mixed bag in terms of their performance, but operationally we think they've got a pretty sound business, and going forward they'll do reasonably well.
I like that mixed bag. Pun intended, right?
Yeah.
In terms of the outlook from government support, you talked a little bit about the tax incentive that the industry gets within Nigeria in particular. Is that likely to remain in spite of the change in government?
So far, in all appearances, it remains in place. However, we do know that the Nigerian government, of course, is under pressure to raise revenues from one point or the other. So there may be changes in the future, but we're not anticipating any changes in the short term. That is likely to remain in place because it has been so successful for the sector.
Right. So the outlook for Lafarge, is it operationally as bullish?
Operationally, I think I would lean towards Dangote.
Yeah.
They're doing a lot better. But if you look at the cement sector as a whole, they're not going to do badly in the year. They'll do reasonably well as well.
Right.
The only key issue around them is that they, in order to compete with Dangote, they've been looking at more diversified earnings. They're using ready mix. They're using aggregates as well to contribute to their revenue lines rather than just pure cement.
And so what does that mean for margins and top line growth?
Margins are slightly lower than those of Dangote. Dangote,
which are phenomenal margins.
Oh, they're phenomenal, around 40% or so.
Yeah.
Dangote, but for Lafarge, it's around 32-33%. Which is still reasonably sound. So I think on the whole, if we're to look at the two stocks, Dangote and Lafarge, we prefer Dangote to Lafarge at the moment.
Yeah. To put those operating margins in perspective, I mean, the South African players are probably looking at, what, single-digit margins?
Single-digit margins. We're looking at 9%.
If you're doing well.
If you're doing well. If you're doing well. It's mostly because of the plants, of course. The Nigerian operators have a lot of newer plants in place. Yeah.
Which
also assists the operational efficiency. They've got newer technologies and makes them hell of a competitive.
Right.
Yeah.
And in terms of, I guess, growth for Lafarge, are they likely to be growing quite strongly?
Well, the growth should be in the region about between 10 to 15%, in line with what the market is doing in Nigeria.
Okay.
South African business, it's still a bit murky at the moment because they're having to reconfigure and add new lines and so forth. But we're also expecting really single-digit margins if they're going forward.
So is this a stock that you're bullish on?
We have a mild accumulate on it.
Yeah.
We're bullish about the sector, the cement sector. Our best play is Dangote Cement.
Perfect. Let's leave it there. Thanks to my guest, Dexter Mahachi, research analyst at Momentum SP Reid Securities. That's all from Buy Africa this week. Remember to follow me on Twitter. That's @Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. For myself and the team, goodbye.